Hi, this is Kerry Artek with Wicked Stocks. Before we jump into today's Tesla report, I just want to encourage you to please click like if you haven't already. It does help us out a great deal in being found on YouTube. And subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. That includes the daily Tesla and daily Apple reports. And check out wickedstocks.com, where we offer a full assortment of daily and weekly video analysis, including daily analysis in the Triple Q, that is the NASDAQ 100 ETF, daily analysis in the SPY, that is the S&P 500 ETF, 2 individual stock pick videos every week that you never see on YouTube, and weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and analysis in the long bond ETF, the TLT, all for a very reasonable $47 a month subscription price. If you sign up, you have a 5-day free trial. And if you don't like what you see within 5 days, just shoot us an email and we will refund you entirely, no questions asked. Now on to the daily Tesla report for Monday, April 10th, 2023. This is the big picture, the weekly chart I show all the time. I like to start with the big picture and work our way into the day. In early January, we tested this channel support, band of channel support, now in the low 60s, the low 70s. On the way up off of that channel, we were anticipating possibly topping out at this intermediate channel structure that is presently in the lower 140s to upper 140s, but a positive earnings pushed us up and over it, and that indicated then 229.39, this descending channel top, as a 2 to 3 month objective. The market is taking its time reaching it. We're a solid 2.5, almost 3 months into it right now, but I still think it's in reach over the next month, 2 or 3, holding above the 140s, though we may visit the 140s before we visit, if you will, the 220s. And I'll get to that actually here right now. I'm going to back up a little bit and show this kind of the sequence of trade over the last month and a half. We did settle below in early March a classic channel bottom that is presently well above the market at 215.35 that indicated a test of a rising 2/3 speed line, trend defining in its own right, that today is at 188.86. Now we did close below this speed line last Thursday. We saw some negative follow through on Friday, but if you've been watching the Tesla report for the last couple of days, you know that I'm not comfortable playing the short side of this market aggressively into later April unless we settle below 183.26 today. So that 188.86 speed line I have as just an intraday resistance level, with 183.26 our base of support. This is 4 stars. It is about a month long channel bottom and rising 2/3 speed line. They're in very close correlation with each other. And so this is a pretty classic support area. I'm not comfortable playing the short side in this market into later April unless we settle today below 183.26. That may happen, but I'm not comfortable playing the short side, as I say, unless we close below 183.26. Until then, I still think there's a case to be made that we can bottom out here actually through April, and from here head up to the 229.39 long-term channel top I showed a moment ago over the next 3 to 5 weeks or so. So for the day trade, it is buying 183.26. For the 3 to 5 day swing trade, it's also buying 183.26. And as I just said, for the 3 to 5 week position trade, it is still buying 183.26 or being long above 183.26 in anticipation of 229.39. For the day trade, holding above 183.26, 188.86 in reach, this former speed line where we can top out on an intraday basis and from here fall back to 183.26 on an intraday basis. If we push through 188.86, the 193.58 former channel bottom is in reach where we can place a daily high. And that looks also here, you can see on this chart, 193.58. In fact, this you could call kind of the day trade dynamic. Holding above 183.26, 193.58 in reach today where we can place a daily high. If we close above 193.58, I think we have a good low for the week. You can see I have an up pivot for the 193.58 level. So closing above 193.58, a few days following that, we should test 207.46, which is the high settlement price from March. That was about a week and a day or so ago. 207.46 able to contain session strength. But honestly, if we close above 193.58, say today, over the next few days, I do think this former channel bottom at 215.35 becomes essentially a 1 to 2 week objective. Let's say by the end of next week, we should push into that 215.35 level, which is preceded by another formation not shown today at 212.19. So closing above 193.58, if you're a 3 to 5 day swing trader, I think you can climb on board for a rally to 207.46 within 2 to 3 days. And by the end of next week, the 215.35 former channel bottom, where we can place a weekly high. Now, the same is true, of course, for those of you who trade the 1 to 2, 2 to 3 week time frame. You know, you're staying long or you're getting long at 183.26, and that allows over the next couple of weeks for retracement up to the 215.35 former channel bottom, where we can top out on a weekly basis. And as I said earlier, holding above 183.26, that 229.39 level, that long-term channel top, remains in reach over the next 3 to 5 weeks or so. So that is it really for the upside. I think I've kind of covered it pretty well. To think if there's anything else that needs to be said for the upside. Let's talk downside now. If we do break or open today below, and let me find actually the right chart here, below 183.26, 172.92 is in reach. That is the low settlement price back in March following that pullback high in early February. So the low settlement price, 172.92, we can, that could actually be it for the day. So if we break or open below 183.26, 172.92 is likely. That's a pretty solid day trade opportunity. Opening, breaking, especially opening below 183.26, that would be a little easier because you could be buying the market if we open above 183.26. But if we break or open below 183.26, no good reason to be long for the day. I would then anticipate 172.92, and then assuming we close the day out below 183.26, that sell signal that did occur last week below 188.86, which is sort of one shoe to drop, if you will, on a sell signal. As you know, it really is a sequence, and I don't know if we're going to get the second shoe to drop below 183.26. It may carry the day. It may hold selling pressures here into later April. So if we close below 183.26, then we are firmly in the bearish camp. As we move into later April, the 146.06, 5/8 downside Fibonacci, then a 2 to 3 week objective. That is 5/8 from the January low against the February high. And there's a lot going on in that vicinity. We have this former channel band of channel support presently between 142.99 and 151.39. That's all right in that 5/8 Fibonacci downside. So yes, if we close today below 183.26, that would be an opportunity to, for instance, buy 145 or 150 out of the money puts that don't expire for at least several weeks. You may go a couple of months out on that to preserve delta. Inversely, continued daily settlements at or above 183.26 despite the slippage that occurred last week. And yes, despite the fact that we did close below this speed line a couple of days ago, is an opportunity to reach for 220 or 225 out of the money calls that don't expire for at least a month, I would say. And I say 225 out of the money calls because over the next few weeks, this descending channel top will be around 225 or so. So that is really the play right now. I don't know if there's anything else that needs to be said. I'll remind you for the day itself, if we open above 183.26, it is bottom picking territory for the day, also bottom picking territory for the week and for the month. 193.58 attainable within the day. It becomes pretty much clearly indicated if we push through 188.86, 193.58 able to contain daily buying pressures. And if we close above 193.58, we've got a good low for the week. We should see meaningful gains then by the end of next week to that former channel bottom at 215.35, where we can place a weekly high. I don't think there's really anything else to say except for the crude oil chart. I do want to mention that the West Texas Intermediate did not close above this meaningful channel resistance. essentially closed right at it. So we're sort of in a wait and see game on crude oil. And the reason I'm bringing this up again is if we do get the settlement above 80.17, that is the June 23 futures contract, the lead contract for West Texas Intermediate. If we settle above that on Friday, by a 1% margin, you really need to just add 80 cents to that, 80.97. You could just say $81 a barrel or higher this week. West Texas Intermediate, we have a meaningful buy signal that should play out into later spring, early summer, then anticipating the 97.14 channel top. That is an inflationary move. It should keep pressure to the upside on interest rates, and I can't help but think that that will have some degree of weight on the stock market. Until then, we can fall off from here back into the low 70s or lower over the coming weeks. I'll leave it to you to interpret all that. I'm going to leave it at that for today's Daily Tesla Report.